Fantastic. Well, thank you so much, and thanks to all of you who are tuning in online. We are so delighted to be here. This is Brett Brohl. I'm Mary Grove. We are managing partners at Bread and Butter Ventures. We are a seed stage venture firm based right here in Minnesota. We invest nationally. We can invest internationally as well. And really, our core differentiator is we focus on what we believe are the bread and butter sectors, if you will, of the modern economy. So really harnessing that Minnesota home field advantage and leaning into the core sectors of food tech, health tech, and enterprise SaaS. And then our whole thesis is to leverage the place-based advantage, plug back into the Fortune 500, and strong enterprise backbone that is here to support companies in outsized ways after we invest. So we're gonna give you just a super quick background on ourselves, the fund, and then get to the heart of the program, which is the pitch. So just to give you some quick background on the fund, beyond what I shared, we are currently investing out of our third fund. We have 58 companies in our portfolio. We are proud to be here in Minnesota, and we really want to be the front door to Minnesota seed stage companies. For example, we have open office hours every week that we do. You can book them on our website, breadandbutterventures.com. And we just love, love, love working with early stage teams. So with that, a bit about me. So I have a background in tech and early stage investing. Began my career with 15 years at Google, where I worked on the IPO deal team, did early stage product and business development, and I also built the Google for Startups organization, which is the company's umbrella for investing in startups, but also startup ecosystems. And then I was an investment partner at Revolution's Rise of the Rest seed fund, focusing on markets all across the country, really outside of the core coastal hubs. And so really proud to be part of this team, proud to be part of this home ecosystem. I lead our health tech investing practice, as well as a lot of our enterprise SaaS work alongside Brett here.
And I'm Brett Brohl. Prior to being on the investing side, I was an entrepreneur for a long time. So I built several companies, both venture-backed and bootstrapped. Took a company and ran it into a brick wall once, and also sold a couple companies. So I've been through the highs and lows and ups and downs of building companies. I've had some success, had some failures. I've been on the investing side since 2016. In addition to Bread and Butter Ventures, I lead the two Techstars accelerator programs that are based in Minnesota, Techstars Farm to Fork, which is focused on food technology, and the Twins Accelerator in partnership with Techstars, which is focused on sports media and entertainment technology. And so between Mary and I, we literally meet with hundreds of startups every year and do one-on-one pitch meetings. Most of those meetings tend to be about 20 minutes is our first meeting length. And so just to give you a little bit of context, and the idea for the real pitch actually came several years ago, where it's, how do we take that one-on-one and some of the feedback and the commonalities of things entrepreneurs could do better and help publicize it and help, through publicizing it, the brave entrepreneurs that are going to come up here today and pitch to us in real time. Mary and I literally, one of the companies we've seen before and we've met, but the other two, we haven't even opened their decks yet. So we have zero context of what we're about to see, and we will be giving real feedback to those founders on, this would be our initial gut reaction. And so that's the context here. So I really do appreciate the founders for putting themselves out there. It's hard enough to put yourself out there on a one-on-one session, let alone a session that is being live cast. And so thank you. And honestly, y'all, just come up here, have fun with it, and you're only going to be better for it, I promise you.
And I'll just remind everyone, too, that fund managers are also pitching ourselves, right? We have to go out and pitch the institutional capital that we raise to invest. So we are constantly in the hot seat as well. And this is a bi-directional process that we really, really appreciate. And we want this to be interactive. So we have carved out time, about 10, 15 minutes at the end, where we want to take audience questions and have more discussion.
Yeah, and with that, we will call up our first founder. Moo, come on up from Citi.
Hi, how are you guys doing today? All right, my name is Mo Okonkwo. I am the co-founder and CEO of Citi. How many of you go to the Vikings game over here? Well, 44% of potential orders at those live events are lost due to the long wait times. Concession service providers are struggling to keep up with the demands with these orders that are coming in during the 15-minute break period. They lack the infrastructure. You have to physically be present at the concession to place your order. There is limited staffing. They have few staffing compared to the demands that are coming into those concessions. And due to this lack of infrastructure and limited staffing, we have long wait times and long lines, which create a negative experience for the guests coming to this event. In fact, 44% of people end up not ordering their food, and 58% of people that eventually go through the line to order their food end up saying that they would order more if the wait times were shorter. As a matter of fact, my mom was a victim of this event. Like, she flew in from Nigeria for the very first time to come watch me here in America play basketball. And during the course of that event, she missed the most important highlight moments of my college career. She was stuck in long lines waiting for food because she was hungry, and the staffing was limited to meet up to her needs. The market we are currently disrupting right now is the high school, is the $1.25 billion high school market. As a matter of fact, in America alone, 336 million fans go to high school events, the major high school events, the basketball and football, every Friday or every season. And out of that 336 million, 74% of them actually order food at this high school event, and $11 is the average spend at this high school event. And imagine in America, we have 26,727 high school events, and we believe we're the team positioned to tackle this industry, because coming from a pro basketball career, working for Aramark, currently an Aramark IT consultant at the US Bank Stadium, Roy, my teammate, working has a 30 years experience working for PGA golf tournaments and US Opens here in America, and he's been handling food and beverages. And I joined my team here in America, solving the similar problems we've experienced waiting in line. And this is the team that I've known since I was in middle school. We have 15 years of experience, actually building products and starting businesses back in Africa, and we found ourselves here in America. And we believe we're the team that is built around to solve this problem. And today, we are actually making money by charging these guests at this event like $5 a season to use our platform. And we believe that we are positioned to solve this problem because of our domain expertise, our product we've built, our experience building this product, and being able to work in the industry with Aramark, which is a leading concession industry in this market. We believe we have the insider information to build this product the right way. And we plan to go to market and capture this industry by actually leveraging, hiring, building our sales staff here in Minnesota, and actually leveraging partnerships with ticketing platforms and sport management platform, high school associations and booster club, and leveraging the NIL deals that is happening to create that viral effect around our problem. We believe we're the team that is going to solve this problem. And we don't just want to stop at high school alone. We plan to take on every sporting and entertainment venue across the globe. And for us to start that, we believe we have to start at high school, the place that most parents would get to watch their children play. Not all of them get to college, but we start there, we create the viral effect, and then we attack college. We attack the US Bank Stadium, and very soon we will be at the Olympic, and we will be taking on the whole world. Thank you very much, and I hope I get great feedbacks from you on how I did. Thank you.
Awesome. Well, thank you so much, Mu. First, kudos for going first, and kudos for rolling with the punches with the slides not working. So rule number one, right, is to know your narrative and know your pitch inside out, such that if there are AV issues, you don't get flustered at all. So fantastic, excellent stage presence and charisma. It's very clear the passion and the command you have over the space and the authenticity that you bring to the table. So really, really fantastic on that front. I would say you did a phenomenal job of painting the picture of the market opportunity, knowing the numbers inside out, painting a picture of both where you are, what the opportunity is today, and then where that could expand down the road, kind of teasing that go-to-market is broader than we're even thinking of today. So that was fantastic. As Brett alluded to earlier, I have not seen the slides intentionally, and so I think hearing, and just for the audience, in a normal meeting, we would hear that, and then we would go on to have a 20-minute conversation back and forth, right, and be able to really unpack the layers and the nuance here. But just hearing the quick pitch would encourage you to think through the sort of the overall narrative and how you want it to flow, and give us as much quantitative data as you can about where you are right now from a product, from a traction. I wasn't sure from the pitch if you had launched yet, if you're live in market, and if so, how's it going? What is the early adoption? What are some of those metrics that might catch an investor's eye? If you haven't yet launched, that's also no problem. Just give us the roadmap of here's the timeline at which XYZ will happen and this milestone, and here's looking down the road, but as clear as possible. And then tying that specifically back to an ask. If you are actually actively raising capital, really helpful to share concretely, we're raising X, and here's the vision of how we're going to deploy it to get to stage Y. If you're not, that's okay too. Just say give us a clear stage of sort of a sense of where the business is live in market. That was really fantastic.
I will second that. So many founders, if slides freeze up or something happens, they freeze up. And it actually is I've seen founders that have gone up and literally yelled at people on stage because slides weren't working. And it is an amazing tell of like character, and you're like, well, I'm not ever gonna invest in that one. And so that's well done. One other thing, I agree with what Mary said about where are you at today, stuck out. Another thing that stuck out, I loved the story at the beginning around like you playing collegiately and your mom, and in the pros, and your mom's experience of missing your most important moments while you were playing as a professional basketball player. But then you went to high school. And so the pain point of like in the professional arenas, and in my mind, I'm thinking like, okay, yeah, I went to the Minnesota Gopher game on Saturday, and the line stunk, and I would love to have been able to just, get something and go pick it up. But the last high school game I went to, it wasn't an issue. I just walked up and got my thing. And so tying like, okay, we're starting in high schools because that's where the pain is the greatest. And so I love like hearing from founders what the pain point is and why the pain matters and what the ROI for the individual players in your market are. So for the person in the audience, the ROI is time savings, right? They don't miss a play, and they're at an event because they don't want to miss a play. For the venue, the ROI, which I pulled out of your pitches, they're going to sell more food because they're not going to miss out on missed food costs. But getting the more specific you can get on that, the better, right? And you mentioned, I think, that the consumer is going to be the one paying for it, not the venue, which is great. Like from a business model, like if that's how it ends up working out, who knows? We'll figure that out in your early stage, so that'll be something that gets figured out. But those are a couple things of like really, I love hearing well-defined pain points. Here's the customer, here's the person that's going to engage with me, here's the pain point, and here's the value of that pain point. And I think that those are some really important things. Do you have any quick questions? Is there anything you want us to touch on for you?
I would like to ask you guys more about like go-to-market strategy and what you guys thought about that.
Yeah, it's interesting just hearing a pitch for the first time, especially when it's limited to, hey, introduce yourself in 5 minutes. We really just want to understand who you are, who's the team behind this, why are you the best founders in the world to build this business, what's the product that you're building and the problem that you're solving. Like tangibly, I often will read it back and try to restate it to make sure that I'm getting it in that follow-up. How does the product make money? How do you launch? That the go-to-market, right, is how do we monetize this? Who's our target customer? And what does it take us to get them on board? And then to Brett's point, so sort of value, ROI, what's the value proposition? How are we different from everyone else? And those are the core things. If you hit on all those elements in 5 minutes, just a quick teaser, like, wow, I really want to learn more. And so you definitely hit the mark on many of those where it's like, okay, I'm fascinated by your founder story, love the narrative, believe that I understand the problem and have experienced it. I couldn't quite articulate back the product and the go-to-market piece, and so I'd say just some crystallizing that a bit more would be really helpful.
I mean, the go-to-market that came out was we're going to start at high schools. Like we're going to start at high schools, but how you're going to start at high schools wasn't present or wasn't in there. And the one way a company can use go-to-market, and when you're in a session like this, or anytime you're on stage pitching or presenting, your only job as a founder is to get meetings. Like that's it, right? So if you're on stage and you have a 5-minute pitch or a presentation on stage, your job 100% is to have, a fund or a potential employee or a potential customer in the audience, and that's usually who's in your audience, any one of those three, is to get a meeting with that person or have them come up to you and talk to you afterwards. And back to your question around go-to-market, how you play go-to-market into that is if you have like a unique or a cool or a go-to-market strategy that's going to enable you to do one-to-many rather than, like an obvious go-to-market is we're going to build a sales team, we're going to do, pound the pavement, we're going to call, dial for dollars, right? That's an obvious go-to-market. We're just going to partner with school districts and or the high schools themselves. But if you have like a cool, hack on a go-to-market that becomes, a way that allows you to scale, like that brings your K factor, that allows you to scale exponentially. That's a really great way to get a meeting, is to pull that in and talk through what that is. And not every company has it. Sometimes it is like we're just going to scale a direct sales team, and you can build big businesses that way also. But there are some companies that have really, really, really amazing and unique ways that they're thinking about acquiring companies. And if that's your hook, then pull that in, make sure you're really great at demonstrating what that hook is.
I appreciate it. Thank you so much.
Thanks, Mo.
Thanks so much, Mo. Any AV assistance on this?
The slides is before we start the next one, is it? All right, there we go.
I'm not going to look.
All right. Up next, we have Hallie, the founder of Muddle and Mint. Hallie, you want to come up?
Great, thank you. Hallie with a Y, Hallie like Sally, and I've been told that one of these is not like the other. So I am Hallie Turner. I use she, her pronouns. I am founder and co-owner of Muddle and Mint. We make alcohol-free drinks for adventurous cocktail lovers. Everyone has had a reason that they don't drink, if even for a moment, a season, or a lifetime. Muddle and Mint is for people who want to connect with people over a good drink, whether or not they are drinking. We combine familiar ingredients to offer full flavor in non-carbonated cans. I grew up in Leadville, Colorado, 10,152 feet. I spent much of my early years as sober companion or designated driver because it's a small town with a very big reputation for drinking. Our tipsy taxi got a DUI. As I have gotten older, yeah, it was terrible. As I've gotten older, several friends have gone sober. I have family members who are sober, and I myself now have a drinking sensitivity that prevents me from drinking most days. And I'm not alone. There are 40% of US adults do not drink. That's probably surprising to many of you because we don't often talk about it. This is up 5% from 2019, so more people are not drinking. Those that are consuming alcohol are consuming less, and consumers of all types complain about product quality. We are looking for more and better options. But more than that, we want a future in which each and every one of us are not defined by our decision to or to not drink. Muddle and Mint wants a future in which good alcohol-free options are available anywhere you want one, including kayaking on a lake. So we have a number of trends that are driving the non-alcoholic market. People are looking for adult alcohol-free beverages. They want drinks that are complex, that are robust, that make them feel like they have been included. Grab and go is also driving market trends. Consumers want the convenience of being able to grab something without having to put a ton of thought into it. Businesses want to offer premium options, especially with ongoing staff shortages. And women 25 to 44 are driving this trend. We are joining a number of non-alcoholic beverages that are changing the face of this segment. So what makes us different? We are a combination of fun and complex. We are fun, not functional. We use familiar ingredients, juice, tea, fruit, and herbs, to provide bar-quality cocktails on the go. There are no chemical or functional additives. And we are complex. Our ingredients result in sophisticated alcohol-free cocktails that invite you to slow down, sip, and savor. Unique to the category are non-carbonated cans, which allow you to take bar-quality drinks anywhere you would like to go. Our drinks offer a range of drinking experiences. Grapefruit rosemary is bitter forward. Green tea mint is sour and slightly aromatic. Hibiscus sage starts floral and finishes warm, dry, and tart. They are so good, they are award-winning. Each flavor has taken home at least 2 awards this year. We offer a competitive MSRP of $3 per can, retail margins up to 40%, and have a long shelf life, having gone through the commercial formulation process with BevSource. We have a growing number of retail locations in 6 states. We are also in a number of on-premise accounts, adding more daily. We are excited to move into e-commerce and grocery over the next 6 to 12 months. I started this business with my partner, Micah. I have a public health degree. He was the executive chef for Governors Pawlenty and Dayton. We also have bartending and entrepreneurial experience that make us the right team to bring these products to you. Fun fact, we met 14 years ago in Antarctica. Had to go to literally the end of the world to find the person I was compatible with. And it has delivered these award-winning alcohol-free drinks. I do not have a VC ask, but we are looking for creative partners that see the value in what we are providing. I'm looking for businesses that would love to do corporate programs. I'm looking for advisory board members. And we're just really honored and privileged to bring quality alcohol-free drinks and the opportunity to challenge a culture that is completely obsessed with alcohol. Thank you.
Really solid. Even though you don't have a VC ask, I'm going to treat it like you're pitching a VC. So whether or not you want to raise venture capital is another good question, right? Like making sure that venture capital is right for you. What are your goals and objectives with the business? And if it is, the path that you want to go down. Because once you go down the venture path, you stay on the venture path. I'm back. Once you go down the venture path, like you have to stay on the venture path, and that's really important for founders to remember. Like, don't fundraise just to fundraise. Like, what are your goals and objectives with your business? If you want to build a really cool company without having raised venture that you can run and build and do it forever, like that's awesome. As soon as you take venture capital, there is the expectation that you will have a liquidation event at some point in the next 10-ish years. And if you're not ready to do that, then don't raise venture. You can still raise money from angels and other people that are aligned with your vision. So, but I'm still going to treat like venture. So one thing, you called yourself co-owner at the very beginning. I always want to know who's in charge and who's the decision maker. And so, like, as soon as you said that, I'm like, oh no, like, is there going to be fights? Is there going to be decision-making issues? And so, who is that CEO of the company that the buck stops with? And I do want to know that. And before we invest in a company, if there's co-CEOs or whatever, we're like, okay, but who's really in charge? Where, how does it happen? And so that can be really tough for you. When you talked about how you were selling and where you had traction from today, I would be more purposeful about that. So you're basically like, we're in 80 retail stores. We're selling D2C on Amazon. We have a couple of wholesale accounts, like I'm assuming bars and restaurants. But you frame it like, so we're going to market direct to consumer on Amazon. We're getting traction there and leveraging that to tell a story to retailers. And so forth. So turn your traction that you have into a story that will help. Like, we're doing this purposefully for a reason. Because one of my questions for you immediately be like, what's your go-to-market? Sure, you have some traction on all 3 of these, but what's your biggest? Is it direct to consumer? Is it retail? And then based on your answer, I would want to dig in deeper on how you're performing and things like that. But be purposeful around your go-to-market strategy and why you're doing things that you are. So those are like the couple quick things that stuck out. I do like it's from a differentiation like space. There's a lot of companies like coming with mocktails or and it's a really cool opportunity. I agree, but I think you'll really get why are we the one that's going to win if you're trying to raise venture. Like, we're going to win because we're better than everybody else. And so that'll be the reason people say no or yes to you, I think, is like, I think people generally get that there's opportunity here, but why are we the one that's going to win is something that you'll really need to hone in on.
Hallie, that was wonderful. I loved your pitch, loved the story, the narrative, the branding is beautiful, and I loved your confidence and comfort, and the bits of humor that you threw in there were just so, conversational, and loved the tidbits too. So that was just a fantastic tone, pacing, wonderful narrative, and really got across in a short amount of time most things that I would want to know. So kudos to you, and thank you for that. Similarly, and I know that you are not actively raising capital now, so it makes sense that you probably didn't want to live stream and disclose all your unit economics and whatnot, but I would say framing it in the context of an investor pitch, definitely the elements were all there, backed with the data and the market size and the directional trends and what are the tailwinds and why is this the moment, why now? In a real pitch, yes, focusing on that traction slide had me. I was like, can we look at that a bit longer? Because I think there's so many ways to cut that data and share those metrics. And if you are pitching, keep in mind if anyone's pitching a more generalist fund or a fund that does anything other than laser focus on your sector, the more you can come with market comp data on, for example, in the competitive analysis slide, or looking at these are our margins right now, e-commerce, in-store, and here's how it compares to others in the category, right? Just arming them with that ready. Like, that's my next question is going to be, let's look at some of the other players in this space. So I think that traction slide in any pitch generally is actually the most important slide in my mind of this is our progress, no matter how early or how late we are. These are the trends, the rate of growth is really important. And then with CPG products, the question is always, you have these omni-channel opportunities. How does one think about them as trade-offs over the next, say, 12 to 18 months of the company's life? So a very clear understanding of where you are now, and then kind of blow it out of the water in the big vision of this is where we're going in the next 12 to 18 months. These are the partners that we need. And then I liked the call to action at the end of, we're looking for potential corporate partners, event partners. Maybe tease us with just a quick reference or case study or two of how those have been effective. Again, what's the value to the partner that gets us really excited of, we never know who's sitting in this room right now. They might be a great fit for that. But really, really fantastic job. And I can't wait to try it.
Do you have any quick questions or anything you want us to dive into? Or?
Yeah, I completely rewrote this over the weekend. With feedback, you've touched on it a little bit, like what kind of future do I hope for and how do I tell the data story? I am hoping if there is more feedback on flow, and did I share my story? Because I've been told that I hide behind my brand.
I mean, I thought like Mary said, the way you told the story was great. Like, your flow was great. Your presence was great. Like, it's, I don't think there was any issues with that at all. To me, it was more of why am I going to be really interested in this one over another one? So I think the personal story, I'm like, oh, this is cool. This is really neat, really interesting. Makes me want to talk to you. Does it make me want to invest? Like, there's some of the does it make me want to invest stuff is where you really need to work, and that could be through your go-to-market, it could be through your unit economics, could be through how you manufacture, it could be what's like the true differentiator between you and some other competitors out there. And a lot of startups use like a similar chart to what you had, but I bet like if you pulled that chart back up, some of the other, if like those CEOs were up here pitching, they might say the same thing you said, right? And so it's okay to say that, but that's when I see a chart like that, I'm usually like, all right, like cool, you got to do something like that. But if I was talking to all those other CEOs, where would they put themselves? And so
that's where you talk a lot the word defensibility, or what's your moat, what's your competitive advantage. If there is something that's such a unique lever, like, hey, we have this national partnership with XYZ that's exclusive, or we have a faster go-to-market path than someone who launches tomorrow and has $10 million of funding, that really gets, is exciting. And then I would say, this is more appropriate for the appendix slides, but if you can track comps in other companies, either M&A activity or public market, if they've IPO'd, right, what are they trading at as a multiple of revenue, and just show that in the appendix. I lead our digital health investing and look a lot at the public market data, but it's nice too when a company has already thought of that. They're 2 steps ahead and they're showing, here's the trends over the last 24 months in this category specifically. So again, I wouldn't cram it into the 5 minutes, but in terms of what to supplement with.
One other quick thing you can do, like, and just to go a little bit deeper about to my same comments I made to Moo, which is like from a pain point, like who your customers are. Okay, so for a retailer, per shelf space, we make them X dollars more than what they currently sell. And so that's why they're going to bring us on. For a restaurant, we enable them to serve a mocktail 10 times faster than making it themselves, and so we increase their revenue. And so you start talking about what the value prop to your different distribution channels are, and which makes me think, oh, she's going to be able to sell these things by caseload because she's making her customers way more money than they could make otherwise. And so stuff like that is like a couple different paths you could think about going. But thank you, Hallie.
Thank you.
Congratulations.
All right, Michael, you ready? We got Michael from Hinckley Medical.
Tristan Hazlett, actually.
Oh, not Michael pitching.
That's right. I'm better looking anyways, I promise.
Worst mustache.
Yeah, way worse mustache. Way worse facial hair in general. So yeah, I'm Tristan Hazlett with Hinckley Medical. Well, I'll do it, I guess, anyways. All right, so.
Try one more time. Give it one more shot.
Oh, that's backwards.
You could present the previous
All right, we're on.
We're on. All right, so the problem that brought us all here today has to do with emergency medical services. About 4 years ago, my older brother came back from paramedic school, and he started telling me the story about how he's horrible at guessing patient weights. My first question is, why are you guessing patient weights? As it turns out, in the emergency medical service industry, that's how they get their patient weights in the field, and they actually use these weights to give medications in the ambulance. This started red flags, light bulb came off. I'm like, okay, this has to be known. So I started doing a little digging, and pediatric patients themselves are all weight-based dosages. It's known in the industry that there's trouble with them giving them dosages. And adults are also affected. The tragic story of Elijah McClain back in 2019 is a 23-year-old who was given an overdose of ketamine and later passed away in the hospital. This never needed to happen if they had actual patient weights in the field. That is why we came out with our one-weight universal ambulance gurney scale. This system attaches to the top of any pre-existing gurneys on the market. It seamlessly integrates with the gurney itself, thereby not voiding any warranty. And it has an intuitive interface. If you're familiar with bathroom scales at all, same process. Put a patient on, get the weight out. We came to market with this in February, and very early on, we were kind of told that this is about half the solution. First, you have the patient weights. We got the question, then what? Well, the then what is, what are you going to take the weights and do with it? So we have an automated dosing software that goes with this product that automatically calculates the dose that they need to give to EMS professionals in the field, thereby removing any cognitive errors possibility and streamlining the process in high-stress situations. Putting these two products together, we have our one-way protocol solution. A simple three-step process, put the patient on using your cell phone or any tablet you have. You can download it from the App Store. You use that to automatically calculates the weight or the medication that you need to give. Key differentiators between us and what's out there right now, first and foremost, we're a first-of-its-kind product that provides accurate, actual weights every time. There is something called ideal body weight on the market. If you can imagine, if you fish, they have like a tape that says a fish is 48 inches long, roughly 4 pounds. They actually do that same process for kids. It's called the Brohl tape. Or they have an age-based system, which is this kid is 7 years old, roughly 35 kilograms. As we all know, on the length-based system, kids and adults here and internationally are becoming more robust, is like how we like to put it. This causes problems, obviously, because how are you supposed to judge that? You're getting away from your actual body weight. On top of that, we have no additional training. You have to actually teach people how to do these estimation methods. We come in with a product as simple to use as a bathroom scale that can streamline that process from start to dosage administration. Our business plan, like our product, is very simple. First, we're targeting ALS departments, which might not mean much to you, but they understand the need for the product. We sell our full-scale solution, which means we get in the door with our product, our first-of-its-kind patient weighing system, and then we basically upsell our software to create that continued revenue stream with these departments. Our market opportunity. We came to market in February of this year and really found one key to success in here, and that's by building relationships. EMS, much like fire if you have relatives, or police, it's a very tight-knit, almost like brotherhood, fraternity community. They have the people that are on the in and the outs. That is why we found early on that these suppliers that sell to the departments are usually the only suppliers that sell to that department. They go back to them, they build that trust, and they continue to sell. So that was what we did, and that's what we've been started doing, and we've had success with it. International market, our product, as I said, is not only applicable here nationally. Our goal is to actually partner some key distributors, and so that way we can scale into those markets as fast and efficiently as possible. See the value. So we have over $100,000 in pending sales right now for multiple departments. Our biggest customer is actually Hennepin Healthcare here in Minnesota. They have been involved with the development for over a year now and are known in the industry to be innovators, and people look to them for the decisions they make and for having some of the best medics in the world, actually. On top of that, we've done over 10 field trials, which correlates into thousands of hours of our product being in the system and over hundreds, if not thousands, of patient interactions. The team, startups in our stage are really, determined by the team. So we start with our 3 technical founders. I'm a mechanical engineer. My brother's actually a computer science engineer, and Michael is another mechanical engineer. 3 of us together have really been the, rapidly producing product developments, and that way we don't have to spend a lot of money on that because we all do it internally. Backed by us is Dr. Abe Campos, who's a practicing physician at UNMC. He's really been the directions and really the clinical advice that we need because we're engineers, right? We did this. We don't want to build a system that's going to be used by engineers. We want to build a system that's going to be used by paramedics and that's backed by EMS professionals. And Taylor, she is our marketing major. She has to explain to 3 engineers every day the importance about building a brand and spending money on marketing when the only thing we really care about, product development. So our plan is simple. We're going to take our knowledge that we gain from these 6 months of being to market, we're going to scale it as fast and efficiently as possible, and then we're going to sell it to one of the main competitors or main buyer manufacturers in the industry in a 3 to 5 years' time. In order to do that, we first need to grow our team because it is such a tight-knit market. We need to grab sales representatives so they can start building those relationships. We need to expand our presence both on the national and international scale, and then we need to scale our operations to produce those products. Thank you.
Awesome. Thank you for that. That was fantastic. I'm going to kick this off in a slightly different direction, I have a million questions, which is a good thing, that presentation peaked. And so some of the immediate questions, just to give you a sense of what's running through my head.
Okay.
So is this a hardware solution? Is it software? Could you give away the hardware for free and monetize the SaaS? Love to hear more about the go-to-market. Who on the team is going to be selling? Is it founder-led sales? Or what's that wedge in? On the problem, I think there's a lot of tailwinds right now around supply chain pain points, particularly for healthcare that are so exacerbated. You could really tap into that. I was compelled by the data of the cost of the errors today, but I would be curious to quantify the financial cost, right, to the various stakeholders in the ecosystem, to the hospital, to the patient, to the payer, when these errors occur. And that's, to me, really selling the pain point of, hey, this is going to fix it. So those are some of the immediate questions that I kind of started out with just to frame what's the thought process there. And so from a feedback perspective, I think that great story here, right? Great problem, very clear the problem you're trying to solve. Would love to back that up with more quantitative data, again, around the cost of the error. And then on the potential for this to be a ubiquitous solution, that's really intriguing. This is a complex marketplace for selling into hospitals, healthcare systems. Would love, to dig in a bit further on that and understand how are you going to get, how does the technology, there's the gurney use case, but could this be something that is, every patient that comes into any clinical scenario where medication is administered? So just kind of my mind goes to how big could this be? So I think stepping back and giving us the 10,000-foot potential total addressable market. I also had a question on the addressable market slides of what do those numbers represent? I think it was 500 million and a few billion. Just quantifying that's in the TAM. You don't have to answer it live, but just in a market sizing slide, be really crystal clear about which slice of the pie. Is this spend on equipment? Is it spend on total cost of care? Is it, what is it? And then the last piece of feedback I have is really exciting that you are already live in market, and you've mentioned that you launched in February, so that's super exciting. Paint us again that picture of quantitatively and as much data as possible, what does the first 7 months look like? And then I would say even more importantly, what do the next 14, 2 multiples of that look like? And this is where we're going, and we have the team geared up to do it. And so, but I loved how you did spend some time on the team slide, and don't hesitate to lean in. This is a general piece of advice. This is really the time to sell yourself and sell the team and why you're so uniquely suited for this. So we're all humble folks, but really this is the time to not be shy about that.
Humble. Let me steal your clicker real quick. I'm going to go through a couple slides also and just give some feedback on some slides. First, I'm also going to say from stage presence when you're talking, like for Techstars, we coach all of our founders to plant your feet and stay still. Always, yeah. Unless you're a special presenter on stage, it's actually really hard to keep an audience's attention while you're moving around. And it's also hard to keep good mic discipline when you're moving around. And when you're on stage, having good mic discipline matters a lot, especially when it's being live streamed, because if you don't have good mic discipline, people online aren't going to be able to hear what you're saying. And the reason we tell people not to move around or even sway is it becomes distracting. And so the whole point is make sure you're listening to what I'm saying, not looking at what I'm doing. And there are some presenters that can pull it off and can do it as a part of their story and can do some really cool things, but most people can't. And that's not a knock on you in any way, but plant your feet and kind of stand still. And that's something like we literally, if anybody ever comes to any of the Techstars demo days, you'll notice that all of our founders plant and stay because we make them. Like you are not moving around
I'm a walker.
stage.
I'm definitely a walker.
And so how many times have you presented on stage though? Exactly. So yeah, you've presented on stage probably thousands of times in your career. And so, if you're a really, really experienced presenter, like Mary built Google for Entrepreneurs, right? Like she has presented about that lots and lots of times. Okay, I'm gonna go through a couple of your slides. And so, if you're trying to raise from venture capital, like I hate this slide. And this is a slide that a lot of founders use, and we're positioning ourselves for acquisition in 3 to 5 years. I want a company that's going to try to build a $10 billion company. If you're trying to get acquired in 3 to 5 years, you're trying to build not a $10 billion company. And there's nothing wrong with this if this is actually your goal. Like if this is your goal, but then make sure you just align yourself with the investors that goal is aligned with, right? And so that could be angel investors that want a quick return on their money. But from a fund perspective, the reason that we're always going after companies that have like these huge visions, I literally ask every company that I meet with, how are you going to take over the world? That is a question that anybody that's ever pitched me knows I'm going to ask them. Like, how are you going to take over the world? And we only, from a fund perspective, we get anywhere between 25 and 35 investments per fund. That's it. And so if we make, and half of them are going to be zeros. And so we need to get our money back. And another 35% of them are going to be 1x, 2x. And maybe 2 or 3 are going to return 20, 30, 40, 50x. And that's where the return comes from the fund. And so if we make one investment where the high end that this thing exits is like 50 million, then we've already lost one of our shots on goal. Gotcha. And so that's the reason why we're always looking for those founders that are thinking, I'm going to take over the world. And if you're telling me today that you're like, we want to exit this thing in 3 to 5 years, if you get an early acquisition offer, you're going to take it. And the best companies out there all get early acquisition offers. And I took 2 with my companies. And so I have no problem with founders doing it. Like, awesome. Like, life-changing money, like, take the money. That's cool if that's what you want. But from a venture fund perspective, it is, we're looking for those founders that are going to get an offer for $20 million, but they're going to make 5, and they're going to look at it in the face and say, F you, I'm going big. I'm serious.
And I'll just counter that with the fact that venture capital is about the goal of having an exit, and there's 2 ways, right? IPO or acquisition. So acquisition is a large majority, a percentage of them, and so that's a totally viable path. But if that's the goal and you're hoping for, the dream is the $20 billion Figma acquisition to Adobe, that's implied, right?
Exactly.
Yeah. So you don't need to say it. That could very well be what you meant here, but that's understood. Is what I would say.
Yeah, you don't need to tell us that you want to get acquired. Like, you're going to either get acquired or IPO or fail. Like, there's only 3 potential outcomes here, right? Or you're going to run a lifestyle business for the rest of your life, and I don't want to be involved in that either, right? Like, I don't want distributions from a company that makes $1 million a year. Like, that's a pain in the ass. Like, I have 10 years to return my investors' money. Yeah. And so that's not what we're looking for. One other thing that I wanted to, on the team slide, this is similar to the feedback that I gave to Hallie, which is like, whenever I see somebody call themselves the president, it's a red flag to me. And I don't know why, but well, I do know why. Because oftentimes when I see somebody have a president, the cap table is messed up. And so the cap table, for those of you that don't know, is like the ownership structure of your organization. And when I see somebody that has president on a title, it's usually like, okay, there's a president, is there also a CEO in addition? And does that mean the cap table is going to be like really like out of whack? And at an early stage, from an investment perspective, we want the founders to own the majority of the company still. And so by the time Mary and I see them, if the founders don't own about 80% of the company still, it's kind of troublesome because we're going to get diluted in subsequent rounds. And because what's going to happen is there's going to be a recapitalization for the founders if they're able to raise a Series A or growth equity rounds. And so those later stage investors are going to say, hey, we'll put money in, but we got to give the founders more equity first. And you early investors are going to be the ones that give it to them.
It's just, to me, it's just the vernacular of tech startups, right? Use the term founder, CEO, versus president or chairman, well, chairman of the board is a different thing, but it's just a tech slight vernacular that I think it can't, because very well it may be the cap table is perfect. It's just a vocabulary thing.
Yeah, for sure. And the 100% like vote, and that's what like where the potential red flag comes from. But when I see it, like that's the honest reaction I have. Okay. I like the way you did. Like some people like really highlight advisors on their team slide. They didn't, and I actually prefer that. Like I care about the people that are working on this on a daily basis, not necessarily the advisors as much. So I like the mention, but you didn't go deep into your advisors, but you had it there. I like the way you handled that.
Thank you.
And then the last thing I'll say is, I think you did a really good job of like the story and like you got like pulled the heartstrings story of like people die, and so it's it's like people are gonna die if we don't fix this thing, and so it's like you're putting a knife in somebody's back and twisting it, and then you keep twisting it, and like so you get people's interest and get that meeting. What you didn't do though is what Mary said, as she mentioned it, which is like what's the actual cost of these deaths,
Gotcha.
or the cost of this misdiagnosis or bad waiting of patients. Like, what's it actually cost to the health system or your buyers? And then what's the ROI of them working with you? And so, in general, from like a pricing perspective, if you're not like providing a 3-to-1 ROI for whoever's buying from you, your pricing mechanism is probably not going to work out. So, for every $1 that you save, $3 you save them, you can charge $1 usually once you're at scale. So that's the last piece. Do you have any quick questions for us? We ended up going long here, but any quick questions?
Yeah, I guess one quick question. So 3 to 5 years, kind of just thrown out there. A question that we have is we do expect to have the buyout option during that time. How do you have that conversation with VCs or angels where it's like, hey, I don't think this is the right time because we're going to grow it more? Because that's what we're kind of told to hear. They want to see 3 to 5 years, maximum 10 years. But what if it comes 10 years and you're still, on the trajectory of Amazon or something like that? How do you have that conversation with your VCs, and what would you suggest to us to do?
It's super specific to each company, each scenario, and the best thing that we could advise is just open trust and communication in the relationship with your investors. And the best founders we've seen are also, no accident, the best communicators as far as updates, check-ins, transparency. Our goal as investors is to be the first person you call when something amazing happens, but also when something terrible happens or when something that needs advice happens. And so I think if we have that relationship, it's a no-brainer conversation. There's no pressure. We're kind of having it along the way. And there are some companies 3 to 5 years in, maybe 3 years in, where we realize, hey, this isn't going to be a billion-dollar business. We all know that. Runway's tight. We have a great opportunity to land this somewhere that works out well for everyone. Let's take it. And that's not a bad, in a portfolio, that's not a bad outcome at all when you have a whole portfolio approach. I'd say have the conversation, have the open trust, and if you're working with the right folks, that should be just really built into the DNA of how you work together.
Awesome.
Yeah, I
Thank
agree.
you.
The open, honest the communication is like, and it changes. Like things ebb and flow, and as long as you're being honest with your investors and your team, that's all that matters.
Thank you so much for the pitch.
Yeah, thank you so much. I think we're out of time now, so we don't have any time for audience Q&A.
But we can give a few wrap-up reminders, perhaps.
Yeah, so I think we're at time unless somebody says we have extra time.
Okay, so just to wrap up here, thank you all very much for joining us today. We actively publish, we have a series from Bread and Butter called Fundraise Faster, which are some tips and tricks of the trade, including a pitch deck series. We'll go ahead and share that after the event. You can follow us at Bread and Butter VC on Twitter. We're super active. And I did want to just give one final mention of our open office hours that everybody on our team does every week. So breadandbutterventures.com, under the community tab. We would love to meet with you, and we appreciate your time today. Thanks,
Thanks to the founders for presenting.